Kate. Welcome everybody, welcome to my webinar, broadcasting live from Mexico City. Today is Monday, January 16th, 2017, and here my local time is 1 a.m., 16 minutes past the hour, 7 a.m., 16 minutes past the hour GMT time. And yes, I couldn't skip this. For the first time, I believe, in my whole Dukascopy career, I decided to take seriously the trading contest and to really dedicate some time to that. And well, this is the second week. I'm far from the top of the list, but I'm already in the 42nd place with an overall account size of almost $230,000. Approximately, yeah, overall, because I've been figuring out this year end how I could really try to perform accurately in the trading contest in Dukascopy, because my approach was that it took time out of my real live trading. So I was figuring out how could I adapt what I do in my live accounts to trade it approximately in the trading contest, and it has worked. But I really don't know why I didn't do it before. But well, it's cool. But this is not only to show off. Only 3 weeks. Well, yes, actually it's 1, 2. This is the beginning of the third. We have the next and 2+ days in 30 and 31 of January. This is not only to show off, because this has some reason. So which one? It's taking a while to load the Dukascopy community page. I don't know why. Well, this is more or less how this looks like so far. But the important thing is this. I'll explain you why. Okay, firstly, my approach when I decided to start trading seriously the trader contest this year, my idea was to really not compete in the direct contest, but instead competing in the Signal Grand Prix. That is the trader that has the most consistent result during 6 months and 12 months is the one that wins. Actually, that was the one I am interested in winning, because trading is about showing long-term results, not only 1 month. But well, maybe I could have even chances to get into the top 10 this month. I don't know. We need to wait and see, because we need to understand that overall this week is going to be hell of a week. Next one also, and in the trading contest, if you follow that contest all the days, you have realized that the top, the number 1, that it's I believe it's a woman from Pakistan, just dropped to the place 20 something because of this gap that we had today. So I believe that maybe had some trades open during the weekend. Do you remember that I was telling that this year and maybe the next 4 years are not going to be precisely to be engaged into weekend trades? It's because of this. Besides, we have Brexit on site, maybe Donald Trump. Now Donald Trump bullying on China. and all that stuff. So yeah, we don't want to hold positions during the weekend, preferably. So well, these are the consequences. But this is not the thing. Oh, Katerina is laughing because she believes that I am in fact showing off. Well, yes, kinda showing off. It's always nice to see that you can, for example, in my idea, I'm not really into winning contests because usually you have to run on reasonable risks at times, risks that you wouldn't commit into live trading. But it's a good thing that when you find a way to adapt your live trading into a trading contest thing and you can actually make a profit, even if it's a demo one, it's a good thing because it proves that, yeah, it gets to a point to a trader that it's only a matter of adjusting, and according to the skill of adjusting your edge, etc., you can actually enter into very different trading styles, like ultra high risk trading, trading style, or super conservative, and all depends on what you want. So yeah, it's a good thing. So it can be done, but it takes a lot of time. Overall, in the Dukascopy contest, you can see people from the week number 1 winning huge amounts of money. So it's tough. It really gets tough if you want to get into the, I would say, the top 10. Not maybe the number 1, 2, or 3. The top 10 is really tough. So, but it can be done. You need to work a lot, and you need to be patient, because that's what happened before to me when I tried to trade a trading contest. For some reason, I opened trades that ended up being wrong, but I was focusing on live trading, of course. When I came back to the accounts, I see I was in a huge drawdown, and I said, okay, let's drop this. Let's focus on the live thing. So I believe that was a good thing, but I really wanted to do something different this year. So here are the results. Okay, so this is again, if you want to so call it a proof that the one that is talking to you now from this side of the internet actually knows what he is doing. He's not only a blah blah thing with talking about having live accounts that who knows if that's true. Well, it's not precisely easy to get to the place 42nd. So, well, let's see how this ends. I'm going to close this because I want to focus on this important thing. Well, this is a chart. As you can see, well, of course, I started having a bad journey. I almost got to the 50% drawdown, and this is exactly what I was talking about. Usually it would be unacceptable for your conservative live accounts to get in 2 weeks a 50% drawdown. That means that you are actually running huge risks. But okay, this is demo, etc. But the idea is that when you know, you have the patience, the technique, and the edge, you can actually have, and this is why trading is a matter of holding into the competition, being able to survive for long enough to precisely allow your trades to do this. Because yes, I started having bad trades, good trades, bad trades, good trades, bad trades, steady, and then bang. Why? Because all things were done precisely focusing on that. At some moment when I am right, I need to let the good trades run, and not the opposite effect. So usually we are very fearful of closing losing trades, but I can tell you that if, for example, here I hadn't closed trades that were in a loss, maybe this loss would be like in here, or here. Here it's not complete, but well, it more or less got to the $50,000 in losses, floating losses. And I, of course, close trades there. But when we are trading live accounts and we are in a 50% drawdown, it's very difficult to take that decision. But at the end, it pays off. Because if you know what you're doing, it's only a matter of time that you really get in the right bandwagon, in the right direction, and you simply let the trade run. This is exactly what happened. A huge wave to the upside. Maybe we had here some turbulence. And on Friday, I closed it here. Why? because I was simply wondering, okay, Donald Trump, that it's spitting evil all the time, is taking presidency next week. We have no idea what's going to happen this weekend. So why in the hell we should hold trades open if we are not in the need of? So yeah, I closed it, and today it ended up being correct because a lot of traders in the contest that were doing this one that was in the first place, I believe now it's the 20th, because of course, most likely, she or he was in the wrong direction. We had a very significant gap to the downside path because we started having again since this year started that Brexit could become again a hard Brexit. We closed the year believing that maybe it's going to be a very soft one and just took some weeks, and now the sentiment is the opposite. So yeah, it was not a wise thing. So it comes at times, even if you are trading these super demo things, that you could think, well, if I let the trade open, what could happen? Yes, I could enter in a huge drawdown, and then what? It's demo money, yes. But the thing is that this reflects your greed, even if it's demo money. We need to learn how to gauge it and to tame the greed. At times, it's simply not worth it to keep trades open during the weekend. Under normal circumstances, and I stated the latest webinars, like for 2 hours, that we are not going to get into normal trading conditions for the next at least 1 year. So yeah, this year, if you can close your trades before the weekend, just do it. Try to plan every single trade to do that. I am already planning that. That is why my approach is going to change to the intraday. And that is why I am performing better in the trading contest, because my approach now is shorter time frame. And that is precisely what you need to trade this kind of stuff. But again, try not to keep trades open during the weekend. Try to focus on trades that you can close on Fridays. Try to measure correctly your time frames that you're analyzing, that you're trading, and close the trades at a good time, at a right time, before, I don't know, before just after London closing or something, okay? So, this is it. Okay. Here it is. The total pips gained so far is 286 euro-dollar based pips. Okay. Most profitable trades was an equivalent of 200 pips. The worst trade was in an equivalent of minus 112. The average point per position positive was 79, and the average pip point loss in negative position was 53. And this is important, the average position size. For the ones that are familiar with the trading contest, you know that you cannot have open more than $25 million in positions, and that you cannot trade more than 5 positions at a time. The problem is that we usually get so greedy in this contest that we open, it's like a gamble, it's like a casino. We just take one trade, let's say euro-dollar, we leverage it the 100% we can, 5 million, we open another 5 million, another. But the thing is that we need to understand, I've been talking about this in other webinars. The money management, it's a clue part of becoming profitable. And you need to understand money management creatively. A position is not necessarily one trade. One position could be formed by hundreds of trades with its own logic, each one. And actually, you can, for example, say, this is my position. And it's a compound of 50 trades opened, mixed, short, long, in different assets or in the same assets, etc., etc. So this is another lesson. Usually the traders that win this contest are super precise in the entry, and they simply leverage the 100% when they find an opportunity. That is not my case. I rather consider that my whole position could be 25 million equivalent in dollars. But not necessarily I need to open $55 million at a time. If I don't find opportunities that justify, maybe I could open one average lot of maybe 2 million, 2.5 million, 1.5 million, and that's it. If I am lucky, maybe I could open 3 or 4. Just at one time, I believe, so far, I opened 4 lots at a time, more or less with 2 million each. So I instantly diversified my risk because I was not only betting into one position. And the most part of the times I have only opened 2 trades or 1 trade, and not at the maximum. So this is why money management matters. This is just an example in a demo account in a trading contest if you want. But this applies into live trading. The idea maybe is that you won't be risking 50% of your account in a drawdown after 2 weeks, right? But the thing is that you need to keep this approach. Creative money management is way more complicated than just saying, I will risk 1% of my account in 1 trade. Why just in 1 trade? Why not 1% of your account in 10 different trades that sum up 1%? So this is a clear example that yes, it can be done. I'm not in the top. Maybe I won't get to the top. But it's a good thing. Because when you compare that you're competing against 1,000 traders, being in the 40, it's a good one. I mean, being in profit, it's a good thing. I commented in other webinars, I don't remember, maybe last year or the year before, that all the contests in Dukascopy actually develop very specific skills that when you master them, they are actually putting some clues unconsciously maybe to develop skills that are necessary to become a trader. For example, I don't like to trade a fundamental trading contest in Dukascopy. I don't like it. But it's important that you know the logic when you have major news releases, not because you want to trade them maybe, just to know that there is a specific logic when big news happens. There's another one that it's the technical analysis contest. I guess you have to predict where the price is going to be 2 months from now. That has another role in trading because that pushes you to understand the real trend. You're not only focusing on ultra short time frames. You are forced to understand the context. The overall context of, let's say, euro-dollar. And besides, if you start watching the specific reactions on price when you have major news releases, you're starting to develop all the kit of skills that you need to become a profitable trader. Of course, the trading contest is the more specific one. But this Grand Prix contest, that is the best performing trader in the latest 6 and 12 months, it's very important. Why? Because again, that puts something in your mind, in some place in your mind, that no matter how you perform 1 month, the idea is that you can actually constantly become profitable in a 6-month, 12-month basis. You're actually developing a long-term skill. Recently, it was added this binary option thing that it's binary options and another kind of different stuff to trade. It seems to be the same, but it's different. But again, when you start seeing how to trade binary options, you start including those overall the timing thing, because binary options is no matter if you are wrong or right for 1 pip or half a pip. The thing is that you need to be correct. The most difficult thing is to choose your time frame. And guess what? In trading, in normal margin trading, like this one, the trader contest, you need to be very aware of your time frames. of your time horizons. I've been commenting that. Of course, it's not that crucial like in the binary options, because if you miscalculated something, you're doomed. In margin forex, you can fix it, but again, you need to be aware of that. So all the contests, maybe the only one that is not including trading skills is a Miss Dukascopy contest, right? Because that is what is called, that is why it is called fund contest. But all these specific trading contests, Katerina laughs. But well, that's another thing. Maybe I don't know the way on why Dukascopy manages Miss Dukascopy contest the way it manages it, because it has real big potential. Because it comes a time when your social skills can help you. I'm not that social. Don't think that I am Mr. Sociality and Mr. Personality. No. I actually like to be alone. Of course, I'm not a sociopath yet. But so far, I like to be alone. I know how to mingle with people, to talk with them, etc. But at a time, it makes a difference. Why? Because at some moment, if you become profitable, you need to have social skills, maybe to manage other people's money. If you're complete, that you're only, you're trading alone in your house, in your cave, and you really have no social skills, maybe you're losing opportunities. So all these contests, for me at least, I don't know if this is the reason behind too many contests. But actually, every single contest develops a specific skill. The problem is that they are way too much contests to play them correctly every time. So there you have it. I commented years ago, I believe, when I started the webinars here in Dukascopy, last year or the year before, I don't know when I started, that you need to focus on the contests. Maybe grab one this month and try to understand what is the logic behind. What's the skill, the specific skills that you need to develop to that contest. And trust me, the skills there are actually applicable when you become profitable. Here it says, Katerina, Miss Dukascopy contest. So the most important contest, they even do webinars. Yes, I've been like in 10 and in 8 times the contestants didn't show up. So I don't know. Yes, I've been seeing some webinars of theirs. And another thing, they don't do it in English. So it's like, okay, lucky if you're Russian, you speak Russian, or yes, it's pretty much Russian. But if you don't, you're doomed. You don't understand the thing. But well, for certain, Dukascopy manages that contest in that way. I really don't know why. I really don't care about that contest because I am a trader. So I am much more focused on trading and the other contests. So, well, but the thing is that even the social skills. Maybe the only one that I don't like that much is the social, how it is called, the social trading contest. That is the copying contest. You choose traders from the trader contest, and you choose them, and you diversify your risk, and you start then choosing the trades, and you can win. Actually, that is the less useful for me, because you have to become a psychologist. You need to start tracking every single trade of every single trader, and to do as a psychologist. And besides, you need to have at least the skill of a break-even trader developed already. Because you need to understand, at least have the skills to understand or to see when a trader really messed up. Maybe you are not in that stage that you actually can be profitable by your own, but you know already the basic mistakes on fear, greed, etc. So you need to learn how to anticipate those in the ones that you're following. So you become more a psychologist than a trader. But guess what? I have in the past talked about long webinars about trading psychology. So yeah, even that contest develops a skill that you need to be self-aware of your psychological side and how that has an influence in your trading. So yeah, all the trading contests in Dukascopy are useful. Not because of the money, because if you win money, it's pretty much impossible that you can withdraw it because of the turnover. But yes, you can do it. But the thing is not that thing, is that you're actually developing real skills. This is not a book that you buy in Amazon that tells you that after reading it you will earn millions, etc. No, actually all those are skills that you need to develop. For example, in the trader contest, have you ever wondered why it was limited to 25 million? I believe it was because people at times were cheating or something, I don't know. But the thing is that you need to learn how to, when you're trading your live account, you need to be able to manage the maximum absolute risk and position sizing. How about having an account, live account, that you say no matter what, I won't open more than $25,000 in positions? For example, let's put an example. And instead of only opening Y5, you can open 100. But the idea is that you start getting used to not opening just one. If you're going to maximum risk $25,000 at a time, why in the hell you should then only open one trade of $25,000? So you need to be tricky to see the clues in this trading contest, because actually they deliver a lot of good data, but you need to find them by yourself. For example, here, average trade lifespan, 19.26 hours. Why? Trading contest of the, and maybe you're wondering why I am talking about trader contest. I barely do that. Because today is Monday, and Garfield is already sleeping. Today is Martin Luther King Day in the United States. We just had a tremendous drop in the pound in low liquidity situation. Trust me, you don't want to trade today. You don't want to trade today. Just wait for tomorrow, or maybe this week will be a dry week. Maybe I will open some trades for the trading contest. Yes, maybe. Why? Because it's demo money. I'm not trading live accounts this week. Okay, so well, that is why I'm focusing on trading contests, because this is useful information for you. 19.26 hours each trade, more or less. Why? When you go to the trading contest, you realize that you are awarded by using only limit or, how you call them, stop order positions, meaning you have less points per trade if you open them at market as a market order. Why? Because when you use limit orders, firstly, you help the ones that could follow you to have your trades accurately copied and executed. But second and I believe the most important thing is because that pushes you to wait. Oh my God, this thing is going to the sky. Well, just wait. Wait for the pullback. Or if you're very sure, put a stop limit, a stop order even above the price, so you will think it twice. Okay, this is moving up, but to keep the maximum points per trade, I need to use a stop order, but maybe it's 5 pip and it needs to be 5 pip away from the price. So maybe that could mean that it could turn widely against me. So that pushes you to wait. That is why, again, this concept of you need to open a limit or stop order trade at least 5 pips from the current price to have the maximum awarded points per trade. And if you go to the trading contest, you will realize that if you don't do that every time, 100% of the time, that is this one, you will barely make it to the top 10. So this pushes you to understand trading in another way, not in that instant gratification, I believe that it's going up and I buy it. No, you need to wait. Whether the price to go even higher or to wait for the pullback. And you know what? That is making traders a huge favor. What is the most typical mistake when you start trading? That you start chasing the market. You believe that something is going to go up, but you're afraid to open a trade. Then what happens? The market goes up and you say, oh my God, I will buy it. And guess what? You're buying it at a resistance. And then you see your trade going immediately against you. No, it's not the broker's fault. It is yours for doing things improperly. So yeah, this aspect, you can even see this is how uncomfortable detailed is that you need to only open trades as limit orders or stop orders. Why? The thing is that you make money. Why not rewarding the market orders equally? It has a reason. Of course you can trade market orders, but the thing is that market orders should be only available for at least break-even traders, because are the only ones that start understanding that market orders, you can execute them when you are constantly watching the market to pinpoint the exact entry price that you want. Not when you see a movement that could happen and you decide, okay, I'm going to open it now because maybe it will go up. Yes, but maybe it will have a slight retracement first. That is why Dukascopy, or at least that's my reading on this. That is why Dukascopy rewards limit orders. Because again, this is pushing you to understand trading in another thing, not in the correct way. There are no correct ways to trade the markets. The only correct way to trade is when you grab a profit, when you avoid a loss, when you cut a profit on time, etc. So it's relative. But usually it's like, I am a super trader, I'm super smart, and this is going up, so why wait? And market will show you that you're not that smart, that you're not that super trader, and that market is a volatile thing. It also pushes you to use a maximum take profit target, a maximum stop loss thing, etc. So it gets interesting when you start opening your mind. When you start trading this contest, firstly you need to start trading not with the intention of winning, but with the intention of learning. What? Okay, why Dukascopy is pushing me to do this? Why? And you will start chewing the information. I'm sharing you my reading on that. Maybe I'm completely wrong, but that's my reading. Average trade lifespan, almost 20 hours. When they push you to reward you the maximum, to open trades from 5 pip at least from the current price, what they want is that you avoid trading scalping or very short-term trading, like 10 pip, 15 pip, 5 pip, because it is 5 pip. It's a huge spread. It's an artificial spread that they are pushing you to take. Plus the normal spread, plus the commission, it's a super wide spread. So the only way to really make it worth to take the risk is not taking trades less than 10 pip, 15 pip, or even 25 pip. And usually those trades, when you measure the market, it usually takes time for those kind of swings to happen. From 5 to 6 hours, maybe 12 at times. But as you can see, my average on game positions is 79. So it goes in tandem with this. I'm not hunting 25 pip trades to avoid my artificial 7 pip trade. I have a 7 pip spread. So it goes in tandem. It is correlated. Of course, it would be ridiculous that you have 19-hour trades with an average point gain on positive position of 25 or 20 or 15 pip, because that would only say that maybe you were holding trades for too much time, to risking and having your money in the table risked at all time just to grab 15 pip. So all this data matters, how you understand it. Maximum drawdown, well, I believe that if you have more than 60% of at a some time drawdown, Dukascopy will if you're able to win a prize, you will win it, but you will be like automatically not shown initially in the list, because yes, it should be, even running this kind of risks, they expect that at some point you don't have more than 60% of a drawdown of you guys, and you can see I was really close to that. But the average drawdown is 23.71%. So that is not that bad. It's the half of it. Number of drawdowns, 3. Win-loss ratio, 48. Now you could say, okay, this is why I always stress the thing. It doesn't matter. You don't need to be 80% of the time profitable to be profitable in the markets. Okay? With 48% of my trades is the way you manage them. And I'm heavy in profit now. It's not that you hunt a one risk and reward thing. And besides that, you have 80% of trading success. No, that's only marketing. That's not for real. If you're able to do that, my respects, you're a genius. But if the most likely thing is that you are not, but that doesn't matter. You can actually win big bucks in the markets, even if you're not a genius. Okay, so this is the statistic data of how I am doing so far. I don't warranty I will trade. I will win this trading contest, but this information is useful for you, not because it's important that you win the trading contest. No, it's what's behind, the knowledge behind. That all this data is correlated, and it's correlated because of a reason. And it's important that we open our minds to go to trade those contests with an open mind of learning, not winning. There will come the time to win, and even though it will become even impossible to withdraw those prices, but who cares? You developed your skill. That's the thing. And if you're really good and patient, etc., you can even withdraw the turnover and withdraw your price. So it's like super good. I don't know any other broker that does this. And there are a lot of, how to say it, areas of opportunities to improve in Dukascopy, yes. But at least this one is good. That they keep these trading contests, and in my opinion, they develop. If you master at some time all the trading contests, you're a done trader. You're a super complete trader. This is not just for fun. There's a serious thing behind it. Okay? It's like a gym. The trading contest in Dukascopy is like going to the gym and really knowing how to use all the machines and to use them in a smart strategy, in a smart routine, you will have a beautiful body. That's the same thing here. Instead of body is that you have a very beautiful wallet. And at times having a beautiful wallet is more handsome than having a beautiful face. So that's up to you if you want to believe that. But well, I haven't known a person that rejects having some more dollars in their pocket. So I decided to trade lightweighted webinar today because again it's Monday. I believe that now I have this information, my trading account and in my trader contest account. So it made sense just to maybe focus on this. Again, this is the most important. 48% win-loss ratio. What was the other one? Average trade lifespan per trade, almost 20 hours. But the average profitable gain on position was 79 pips. So this needs to be correlated and have sense. Look at this, the difference. My average negative in pip, negative loss positions is minus 53. And my positive is 79. That's very close to the 1-to-1, you see? You don't need to trade a 1 to 10, 1 to 20, and to bet for 80%. The more you're obsessed with a win-loss ratio, the more likely you will be pushed to, the more you're obsessed with having 80% of your trades profitable, the more plausible is that you will have this win-loss, because you want to have this win-loss ratio at 80. You will have bigger drawdowns, and that doesn't even matter. Okay? It's much better if, for example, if I had weighted, if in average, I was taking 53 pip in a loss, and I was waiting to fly a 150 trade at least per trade, I can bet you that I wouldn't be in profit. I can bet you that. But yeah, maybe I would be holding a lot of trades in floating position, in floating losses, not closing them, but maybe I already closed 10 trades in profit, and I would be like 100% win-loss ratio, but with another 10 trades in floating and negative positions. This is real. This is how you get real. If you're better than this, you're a genius. And maybe you should be looking to be hired by by Goldman Sachs, by, I don't know, some super bank. But yeah, if you're not, it is not the end of the world. It is pretty much 1-to-1, less than 50%. But look, this is important. The average drawdown is 23%. It's not bigger than the heaviest that I have. That means that yes, at some point I had a huge drawdown, but it never allowed me to make that drawdown bigger. What happens if you hold losing positions and you don't close them because of fear? You will inevitably have bigger drawdowns. Okay? It works way more to close a trade, even if that makes you have 48% win-loss ratio, in exchange of having these drawdowns under control. Okay? If you manage your drawdowns, it doesn't matter if it's 1-to-1 at the end. You play with the lot sizing. So that is why trading, I love it so much. It pushes you to really be creative, to think out of the box. So this is real trading, not real account, it's contest account. But as I said, the only thing I did in this case was to adapt my live trading for this trading contest. So yeah, my live account, of course, it doesn't look like 125% in profit already, of course not. But in its proportion, yeah. It's cool to have a 5% already in this month of June in one of them. 5%, it's good. You don't need to be 100% in profit every month. If you are 5% in profit every month, well, after 6 months and 12 months, that's the habit that you need to develop for the Grand Prix contest and Dukascopy. Money won't be your problem if you're in your life, because it will only matter that when you need money, you open open the water to take money out of the market and you drink it. Of course, not that simple, but yeah, it is. Money will become an abstraction, that it's available out there at your reach. But firstly, you need to focus on developing this. It sounds very easy, but I can tell you that before really understanding this and being able to apply it into real trading, it took me more than 1 year knowing all this thing, but being able to apply it. So yeah, it's easy to know it, but how to apply it to yourself, it's difficult. How to really respect your rules, to follow your plan, not panic at drawdowns, it's very tough. Because trust me, once you have, I believe that at the beginning I had like in a row, I already had 27 trades. I believe that the first 6 of them were wrong. I had 1 right. Then I believe that I opened another 5 wrong, and then 1 right, or 2 right, I don't know. So it's very difficult when you're trading live accounts, that once you have 6 in a row wrong, then 1 positive, then 6 wrong, and then maybe the 6 positive, it's very difficult. Psychologically defying. So this is the way it is done. I'm in 47th place with 125% in profit in this demo contest, and I'm not having 100 win-loss. No, that doesn't go that way. That you don't have to have a drawdowns, not necessarily. Of course, the most recommendable thing is that you don't have them. But actually, you can have them. Trading responsibly, maybe not 50%, but maybe 3, 4, 5, 7%. It's normal. I mean, you're speculating. You're not investing. You're speculating. This is the closest thing to gamble. It's very difficult from gambling, but it's the closest thing in the market to gamble. And pretty much my negative and positives are 1-to-1. So yeah, you can make it. Lot sizing is the difference. How you maneuver the trades. And the difference is that when you decide to close a trade, when it stops meeting your criteria that led you to open the trade, you simply close it, period. If you have a checklist of 10 elements to open a trade, you need to have at least, let's say, 7 elements to keep it open. At the moment it gets 6, you close it. You won't start having wishful thinking, yes, it will come back. No, you take the loss, period. That will allow you to focus on the next step, on the next trade. If I hadn't done so, imagine, from the very first day I would still be hanging in losses in one of those trades. That would be ridiculous. That is not professional. You want to make it big in the markets, you need to start thinking professionally. Okay? So, I just can't believe it's just 1 hour and 5 minutes after. I must have something wrong, guys. I feel like if I started talking 10 minutes ago. Okay, let's quickly review if I find something interesting in the news or in analysis. Okay. Okay, no, apparently not. I will just have a quick look, of course, at the almighty pound. I believe this is the only interesting thing today. This is, I want to take a screenshot. Wait a minute, please. We have time, right, Kate? Like, what? 10 more minutes? By the way, let me close already my J4X because it slows my computer. And, well, here it is. Okay, just quickly, I guess I commented this trade last week about having here some potentials to the downside in dollar Japanese yen. This is one day chart. I remember that we went to the hourlies, and I was commenting that yes, there were some signals of that this thing was making like a kind of support that you have to decide whether to go long or short if you want it, but by no means to have a trade open while Donald Trump was having the first news conference after being elected. And I had my reasons to tell you so because the markets went nuts. But the thing is that, yeah, I believe it was here. I believe it was here. Something like that. I believe, yes, it was here. But I commented that, yes, because of that configuration that time, maybe this was eyeing to the downside in the bigger time frame. I believe it was the hourly that was showing me that there was potential to the upside. But you, again, need to be aware of the context. Do you remember the technical analysis context I was telling you of Dukascopy? Well, that pushes you to have the overall outlook for the next 2 months, and it's important why it's 2 months. It will sound ridiculous. Why 2 months? Because it's not 1 month, and because it is not 3 months. It is 2. But it has a reason. Psychologically, every quarter, all the economists make forecasts, even central bankers. They base the major decisions they take quarter after quarter. Every 3 months of data for them are like important. Why? It makes sense. We have 4 seasons during the year, 3 months each. So it's a natural cycle in life, in Earth's life. So that is why having an outlook for the next 2 months is just being in the middle. It's having a real feel of what the market is doing. So yeah, this trade, when I commented it, it was in the bigger time frame. This is eyeing to the downside. In the lower time frames, it's eyeing to the upside. So you need, if you're going to trade to the upside against the main sentiment or against the main potential movement, you need to be very aware, use very tight stop losses, etc. Okay. At the end, in this case, not the longer time frame, because for a lot of people the yen is heading north. But according to the price action and the way I understand it, it was heading at least temporarily down in daily. If you go intraday and you trade against that, you adapt your stop loss. If you're trading in the direction of the most likely bigger time frame movement, you can use wider stop losses because you have the slightly possibilities in your favor. When you're trading against for example, the most likely movement in dailies, You have to be very aware of your stop losses because either you're right immediately almost, or you are out of your trade. Okay. Well, that's I just remember we talked about that. This is the almighty pound. This is daily again, and please wait a second. Daily again. We have Broding falling wedge of 43% quality. It's not that good one. Look at this gap to the downside. Why I was telling you just to step aside of this, because yes, we have a gap. Usually the gaps are closed, but this last year, I don't know how many times gaps were not closed. So yeah, it's not a no-brainer. But when you have a gap to the downside in a very psychological level, like the 1.2, just retesting this low, and you're just about to, even if it goes further down, to retest this, that is part of this broadening of this pattern to the downside. After having the price closing, opening just below, well below this lower Bollinger Band, it's not precisely the best thing that you bet to the downside. Maybe it's to the upside. But again, the fundamentals were the ones that made this happen. And since you're having Trump taking, I'm going to tell you the real deal with Donald Trump on Friday. In the history of the United States, is the first time that you will have the capital city that heavily occupied by the military. Never ever that happened. We have again risks. The United States putting tanks in Poland. All the tensions spreading there in Russia. Donald Trump is not making anybody a favor bullying China and North Korea. I said I was not going to talk about geopolitics, but in this case it's specific. What I believe is that some paranoids in America believe that if there is going to happen a moment of vulnerability for the defenses of the United States, it's exactly that very same moment that you have that exchange in powers. You know why? This won't happen. Imagine North Korea launches a nuclear missile to somewhere in the sea. Let's not say the United States. Let's just say in the middle of the sea. At just the moment, these guys are exchanging powers. Who's going to be responsible of taking serious decisions if necessary? For a while, I mean, all the systems are weak at some point. And when you have transitions of power, it's the most delicate state. Because for at least some minutes, seconds, at least for the United States, there is nobody really in charge of that thing of the nuclear codes, etc. Or they have Plan B and see if that happens. But it would be so awkward, you know, having this ceremony and then Obama or Trump running to solve a situation, extreme situation. It's like a very delicate thing. So what I believe is that since North Korea just threatened to test a ballistic missile that could hit the United States just to send a statement to the United States, maybe they are fearful. Maybe they are some paranoids fearful that at just that very moment, and since Trump seemed to be soft on Russia for some of them, maybe Russia would profit extending and gaining some extra territories like in Crimea just because they want to believe Russia is the enemy. So there's a lot of tension. The most likelihood explanation of all this is paranoid. The most likely thing is that neither Russia will expand, nor North Korea will actually send a loaded nuclear ballistic missile to explode in the middle of the sea just to send a message to the United States. Nor China will take some retaliation at that time that would maybe justify the world panicking. But the thing is that the markets don't like these tensions. That's the big deal. Because there are risks, inherent risks of having Trump in power. Yes, it's unpredictable in a lot of things. But in this specific thing, this week is going to be, imagine that, yeah, North Korea actually sends a missile. So who's going to be watching that? Who's of those two presidents, the ones giving the power or the one receiving it, while all the cameras are watching? Who's going to be watching that? Of course, they have the military, but in case of major decisions, they need to consult the president. So, what I believe that at least North Korea, yes, could be willing is to prove and to demonstrate the world that yes, at a moment, they are very fragile. Just to send a message. So why to trade now? Why to trade this week? I see no sense. At least no real money trading. And besides, we had this big gap to the downside in cable. What this could mean, we're testing, retesting psychological level, blah, blah, blah. But I've seen this last year several gaps not being able to close. Actually, the weekend gap after Brexit, if I'm not wrong, it is this one. This gap, this is Brexit. This is the weekend gap after Brexit. You see, we had the price closing here, opening here. This gap was never closed up to now. So yeah, it's not a no-brainer that a gap is closed every time. So opening a trade here just because we hit a psychological resistance, I invite you to watch the 1.3, that it's even more relevant to cable than the 120, at least at this time. Look at this. The market, in fact, jumped from here, stabilized here, never closed the gap, and then moved back to the 120. So yeah, if you ask me, if we trade betting that the gap is going to be closed, yeah, you would be using the exact correct language, betting. This explains that this, even if it's of course way smaller, that doesn't mean necessarily just because it's at a psychological level, this gap will be closed. It has technical reasons, yes, but the overall sensation, the world, I believe, and overall, because if somebody will try to push the United States or try to push at least the psychology of some of the leaders of the United States to challenge them, they will be wanting to do that this week, because they know that this exchange will happen at some point. They have a kind of vulnerability. So yeah, you could have a bad news, and then you know what? This could go to the 118 or the 117. So just wait. This, I believe, the most emblematic thing. I don't know, maybe the crosses having pound in them, maybe have a even wider gap. I don't know. But well, this is kind of if you traded this like in the manual, maybe you should be buying here. But just some days before, we see that gaps are not closed. Not all gaps are made equal. Not necessarily that means this gap will be closed. So we will just stay aside of the markets for this week, I believe, unless I find something relevant. that could justify for you maybe considering open something. But if not, I'm not going to do that. So I believe it's time to close the webinar now. 1 hour and 20 minutes. No, 1 hour and 10 minutes. Because I use 10 minutes to make the traditional blah blah thing at the beginning. So I hope you enjoyed this different webinar, because I barely talk about trading contests here, that you found useful some information. And remember that this week is going to be like that hell of a week. Very unpredictable. So yeah, what best evidence than this? We opened with a gap to the downside in cable, and I don't know if in other assets I would bet we did, but I'm not following now the markets. I didn't even bother to start reading the markets. When I knew that we had this gap, I said, you know what, forget about it. I will wait maybe for tomorrow. Here it says, even just minutes, saying very interesting webinar. Oh, Rukaslu, thanks a lot for dropping by, man. I see you here. It's very nice to have you around. And Karina, thanks a lot for hosting as always. And all the guests, thanks for showing up. Remember that I expect you tomorrow at the same time, same place. Remember to trade safe, be safe. And this is Alberto Alvarado, and bye-bye.